Hello, everyone. The market is essentially moving like it's Thomas the Train. I think I can. I think I can. And it does. It just continues to make new all-time highs. The fact that new highs are being made on very generally good bullish setups, they're still ripping to the upside at this point in market structure is very, very interesting. So in today's video, we're going to take a look at what the next steps are for the market. How long can we just get away with going long on SMH and Nvidia and AMD? We're going to take a look at the large tech stocks, the SP500, the NASDAQ, the Russell, the VIX, the bonds, and all that good stuff. We're going to put it together. All right, so without further ado, let's get started with the video. And of course, if you guys are enjoying the video sometime within the next few minutes, make sure to like, comment, subscribe, and do all that good stuff. Now, let's take a sip of coffee here and let's talk about what's going on. Okay, so I was saying literally in yesterday's video, hindsight is 2020. Hindsight wise, going long on the SMH at the 200 simple moving average would be the easiest trade you could make. But did I want to take it? No, I did not want to take it because it was too simple and I was greedy. Basically, that was the gist of it. I was greedy. I wanted to pull back on Nvidia below 130 and AMD below 130. That would set the SMH lower as well. So I was greedy. That's essentially why we didn't go long at this very nice opportunity to go long. This was the first time that we touched. This was one of the times we touched the 200 simple moving average on the SMH, which is the semiconductor ETF. And every single time we've touched it before, since we've broken above it, it acted as beautiful support. So this was one of those times, and it was too, I wanted to be greedy, essentially. So a lot of this rally that we had today was mostly caused by the strength in the NASDAQ. So we're going to go ahead and take a look at the large tech stocks and the good setups that I was saying there were yesterday, honestly, and they played out. So number one, the SMH did very well. AMD finally reclaimed above its downtrend line. Okay, so you can see that AMD was also one of, so when at different points in market structure, whether it be different quarters, months, weeks, different technical setups appear. And right now, the environment is currently when we have specific downtrends or specific uptrends, the market is trading around those trends. And clearly at the moment, AMD just reclaimed this trend line. So as you know, essentially what we're looking for is two closes above this trend line level that would solidify a continued move to the upside, in my opinion. So if we can get another close, which is tomorrow, if we get a close above 139.75, 140, that would be optimal, right? This would really solidify a continued move on AMD. And currently, this is what you want to see. We're at these lows. We're seeing strength out of the rest of the tech stocks. And now AMD, which was one of the losers, clearly it's not trading up here as we're going to see Apple or Amazon or the rest of the stocks trading. AMD is at the lows. So AMD is technically one of the losers in this short-term period. And it's showing some strength. Okay, and it clearly finally broke and held above this major trend line. So you can see that this trend line all throughout for the last few months was very, very important. And currently, it's a very, very bullish sign that we finally closed above it. So there's that for AMD. Nvidia, not as bullish. Nvidia failed to close above its trend line, but it's hugging it. And it's still showing buying pressure. Obviously, you're not going to want to go long Nvidia outright if there's other winning stocks to play to the upside. But you're also not going to want to automatically just go short. What this is doing is it's causing people to essentially wait. You have to wait to essentially see if you could reclaim this 142, 143 area on Nvidia But the people that have went long down here are already very comfortable within the trade. They have a solid place where essentially they have entered at a solid horizontal level of support. Prior support denotes prior resistance denotes new support, right? And as you can see, this played out. But Nvidia specifically is a lot of the move is being stunted purely because we're not closing above this uptrend line. And Nvidia is also another stock where an uptrend is being shown. This was another really solid level of support all throughout for the last few months, and Nvidia is failing to close above. But by all means, this is not a time where you would go short. The reason for that is because we are only at the 38.2% fib. If the market drops from here, great. But mathematically, in my opinion, this is not a good opportunity to go short. Like I said, like I was saying before, I would rather wait for a pullback below 130 to go long on Nvidia than I would ever want to just go short into weakness on Nvidia. Does that make sense? Because Nvidia is one of the winners. You don't want to just randomly go short one of the winners because you think the market should get a pullback, or you feel this is a bearish setup, or you think, oh my God, how is this going to continue rising? Especially not at a level of support, specifically not below the 38.2% fib, or definitely not below the 22.6% fib. You want to see Nvidia come back to levels of resistance. Now, logically, why you want that to occur is because you want people that went long at levels of support to exit their longs. You want to enter short, or you want to at least lean bearish when investors are going to start exiting their long positions. When a good opportunity to start exiting your long positions appears, that would be the most optimal time to start even leaning short. Okay? Trying to lean short down here while longs are still comfortable. This would be a very aggressive short. Therefore, I would not want to enter. I hope this makes sense. And there's that for Nvidia for now. Amazon and Tesla had some really, really bullish setups last night. I was saying this was just like a very, very awkwardly bullish setup. And clearly, like if you erase this candle here, this was a very bullish setup that we see on Tesla. So obviously, Tesla was one of the winners today. One of the major winners today. Amazon, also a really, really solid setup on Amazon. They both gapped up. This was not a short opportunity. And of course, it looks like now we filled this gap on Amazon, which was the low from November 14th at 210.88. We wicked above it. So now Amazon does not have a gap to the upside to fill. This Amazon, Tesla, really, really solid, strong setups. This wick is the only issue here. But regardless, there's potentially still a lot more room to go, especially if these levels of support can hold on Amazon and Tesla. All right. This is not a reason to just automatically go short. That's what I would say. So there's that. Microsoft had a really, really big move as well. And like I was saying, this is a time where trend lines are really prevalent. So you could clearly see that a trend line was formed, a downtrend line. It acted as support, and then it acted as resistance. So then what ended up happening with Microsoft is that we had a rip to the upside, a pullback to a level of support, essentially, and then a continued rip. This is essentially the playbook that you would want to see AMD follow if you're bullish. And AMD is over here in terms of its the lifespan of what Microsoft is currently doing. AMD just closed above the trend line. So there's still some more room to go for AMD, but Microsoft could be showing what is yet to come, okay? So clearly we're seeing some strength out of the prior losers. Microsoft was a prior loser, right? And it was down here before all of these candles even existed. Microsoft was one of the losers, okay? It was trading down here, trading below a trend line. It caught a bid, buyers stepped in, and now we're trading above the trend line, and it looks like, you could clearly see the bullish pressure in Microsoft, okay? So there's that for Microsoft. Apple just chugging up along. This was also another trend line sort of setup where we broke above and we reclaimed it, one of the losers, and then it just started to skyrocket. So it's this Microsoft was following Apple's playbook, and we're going to see if Microsoft can continue, but currently Apple, is this a time to go short on Apple? No. Is this a time to go long on Apple? That is the issue currently for all of these long setups. If you want to go long, you have to have a very tight stop loss. Going short at the moment, it's tough because as much as you would want to go short, it's not an automatic, just a really, really solid, easy opportunity. But to go long into these levels, into all-time highs, into just chugging strength, I would say Apple, it's nearing its end here. I would say Apple is nearing its end of this move. I would personally be very, very shocked if we start to break above 244 and it just continues rising. We should get some sort of a pullback soon on Apple, and then that pullback, it might not be huge, but that would be a much better opportunity to go long. Especially, I wouldn't want to go long into strength. I would rather go long into weakness. Right now, I'm saying it here first, Apple should be getting a pullback soon. And I would be very, very shocked to see if we break above 242, 243 on Apple. How would we make money off of this? I'm not your financial advisor, and this is not financial advice. Do we go short into holiday weekend, holiday season, the Santa Claus rally? I don't know. But I would be much more comfortable going short if we had another green day. Another 2 or 3. If the market starts to really close green very, very well this week, that would make me much more comfortable being short. Things are starting to become very euphoric for Apple right now, and that's not sustainable. And because it's not sustainable, it becomes a better opportunity to go short. All of the people that went long down here, there were multiple opportunities for them to start taking profit on their longs. And as we get situations where we start to just break upward and we just don't have any sort of pullback, that is generally, I wouldn't be surprised if we get a gap down tomorrow. But just understand, if we get another solid green day or two, just assume that I'm short. And that is the predicament that we're currently in. Okay, so there's that for Apple. We're nearing the end of this green move to the upside. We should get a pullback, in my opinion. Let's see what ends up happening. But there's that for Apple. I showed Amazon, Tesla. Google is one of the just garbage. It's not really doing a whole lot. It's still one of the losers. Like I said, you would want to see a bounce to at least 175, 176. I was showing how we could get a bounce to this level yesterday. It looks like that's what's occurring at the moment. Nothing too much, but then Meta had a monster. Meta was a monster today. We reclaimed back above 583. Major level of resistance and support on Meta. This is also primarily due to, I think, Mark Zuckerberg's positive relationship now with Trump. And this was one of the stocks that should have been a bit more influenced by Trump's presidency, but because Zuckerberg, prior to Trump being president, did not have a good relationship with Trump, once the news came out that he's now in good graces with him and things are looking good and they're working together, I think that had a lot to do with why Meta caught a bid and it's starting to break upwards. Meta is showing some strength. Okay, so this definitely looks like it can just continue to make new all-time highs. I wouldn't be surprised if we see 630. It all depends, though, on the strength in Apple. And also, just it's tough. Would you want to go long into this strength? Again, like my gut it's very difficult. It's very, very difficult. I personally, it's difficult. But that's currently what we're seeing on Meta. Took a look at Google, Microsoft. Let's take a look at Netflix. Netflix is also just pumping, obviously, because of the rest of the market. Showed some strength. Caught a bid. All of the large tech stocks, all the FANG and everything were all green. Netflix, no different. Now, let's take a look at the VIX. The VIX is very important because we are very, very weak right now on the VIX. Generally, when we are weak on the VIX, it is bullish for the overall market. So, let's just start from the beginning. It's important to monitor the VIX because the VIX has an inverse relationship to the market. If the VIX is showing a lot of weakness, that is very bullish for the overall market. Currently, VIX bears are very happy. Yesterday's video, I was saying, would I want to be short the VIX at this level? No. But does it matter what I want? Not always. The VIX is still breaking down lower. It's making new lows. And as we break and fall down lower, this is bullish for the overall market. And that's currently what's going on. If we can break below this $13 level on the VIX, that would really, really denote a lot of bullish pressure in the overall market. That is also a good spot where you would normally want to just grab some longer term puts, but that's beyond the point. Right now, the VIX is breaking down lower. It looks like we should get a bit of a bounce soon. This is not a sustainable move to the downside either. That's the problem here. The VIX is showing a lot of overextensions to the downside. Apple is showing a lot of overextension to the upside. And it puts you in a predicament. Do you want to start chasing the move to the upside if you're a late bull? Probably not. But then if you see moves like SMH just bouncing off of the 200 simple moving average, if you see tech stocks, Tesla, Amazon, ripping, gapping up, filling the gaps, it becomes difficult to not go long. There lies the predicament of trading during December. There lies the predicament of trying to go short and trying to use your logic when there is a lot of buying pressure in the market, especially during the month of December. Seasonality-wise, one of the most bullish months of the year, where we see multiple factors. We see the Russell 2000, retail-related stocks doing very, very well during December. Christmas, Black Friday, all of these different holidays that incentivize people to start being bullish on products. Is that a time where you want to start being bearish? As much as it looks like a good opportunity to go short, a lot of the reason why people start losing money during December is because they want to go short into strength. Do not do that. It's much, much easier to go long into weakness. And that is something that I always share. And yeah, you know, like if you just look at the S&P 500, technically, guys, look, like we are above a trend line here. We are closing above a trend line. We've made new all-time highs. Where did all the shorts go? If you were trying to go short, for what? Why would you go short right now into this strength when all of the large tech stocks were either showing bottoms or Apple is showing extreme buying pressure? You don't trade like that, okay? So just be careful. You would rather miss the opportunity to make money than losing money trying to force a trade. Going short here on the overall market is forcing a trade, and I don't think anyone in the right mind should do that. But of course, I'm not your financial advisor. This isn't financial advice. You do what you want to do. At the end of the day, what I really, first of all, once again, guys, the issue with these setups is I would not be surprised if we get a massive rip to the downside. And the reason for that is what we've been seeing intraday. Let me show you guys one second. So now this is the 1 minute time frame of the ES. Okay. Like I was saying, we monitor different types of market environments that occur on the larger time frames. The market makers and everything still apply them to the smaller time frames as well. What has been more prevalent recently, especially today, what has been more prevalent today, which is why one of the reasons why we entered short, it was a really good opportunity to go short, and it worked out beautifully. We went short at 1036. We went short right here, and let me pull up a chart of the SP500 instead. Be easier to see. Okay, so we went short at 1036, and I'm not sure why the chart looks funky here, but regardless, we caught this move to the short side perfectly. And what ended up happening, a few minutes later, the market absolutely collapsed. The contracts ended up like 30-40%. So this was a really, really solid trade. The reason why I took that is because we are seeing aggressive shorts, aggressive selling pressure into strength. So which is why I am saying, guys, I would not be surprised to see a massive, just massive red candle to the downside. And that, in my opinion, would be how a bearish move would start. As so many people are starting to go long and long and long, we're just buying and buying and buying. What do you see intraday? Massive, massive red candle breaking below major levels of support. A bounce back up and an even bigger, massive red candle. Okay? So this was all throughout the day. We started feeling a lot of underlying weakness. Yes, the market continued to bounce and it continued to chug upwards, and we obviously closed at the highs. Great, by all means. We didn't close below any major levels of support. We continued rising. Great. But the fact that we're now starting to see something like this occur intraday is something that I don't see many people speak about. Maybe they do speak about it. I just don't watch people, but this is definitely something that you guys have to keep your eyes on. It was something that it took me a very long time to understand in the market and mechanisms as well. When market makers use things on a larger time frame, they use different setups on a smaller time frame as well. So keep that in mind. If you're starting to go long, and if you're in a market environment where there's a lot of bull flags occurring, okay? If there's a lot of bull flags occurring on the smaller time frames, chances are there's a lot of bull flags appearing on the daily time frames, on the 4-hour time frames as well, okay? So that is something that you really, really need to take into consideration. And currently, that's why these large rips to the downside is not something that we have to take lightly. And yeah, most likely so now here's the predicament. Trying to catch a top, it's not a high quality setup. It's not the best, safest trade, which is why trying to go short up here, you have to end up taking some puts out for a few months expiration. Trying to catch the top up here is not safe, but it's starting to show a lot of underlying weakness in the smaller time frames. So with that being said, that's really it. I hope you guys enjoyed today's video. Again, if you guys stuck around this long, I love you guys. And once again, thank you guys so much for your support. I am trying my best to be consistent with these YouTube videos at least 5-6 times a week. So I hope you enjoyed. There's a lot that we still didn't cover. We didn't cover the bonds or the yields and everything. There's nothing really to look at, I guess. We could, but you know, I could just show you guys real quick. If it wants to load. There we go. Okay. So, you know, I was also showing the HYG divided by the TLT, and I was trying to explain that when the HYG when the HYG divided by TLT really starts to show a lot of weakness and it starts to break down below, that is generally bearish for the overall market. Clearly, yeah, we're continuing to make new lows, but this is not some monstrous rip to the downside. When we get that, I will go more in detail about it. But currently, it's continuing to show some weakness. Generally, what we've seen in the past is when the HYG TLT shows massive weakness, that is a lot of underlying weakness in the overall market, and eventually the market follows. Currently, the market is not following. Obviously, we are at all-time highs. But once this symbol starts to break down lower, then we're going to have some issues. So I would say especially below this 83.50 level. So with that being said, I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow on voice chat and trading in the Discord room and also YouTube. All right. Take care. Have a good one.